Hi everyone, it's Evan here from the Trade Risk on Friday, March 17th here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, some sector analysis, and then finish off the video looking at some of those popular high beta names, those individual names that we haven't looked at in quite some time. So happy Friday, happy St. Paddy's Day. Thanks for those who are tuning in right now that haven't started the party yet. And for those of you who are maybe catching up on Saturday or Sunday after your hangover, that works too. Before we get into the video, a quick reminder, Tuesday is the webinar that I am hosting on market regimes, classifying the market, ways to sort of simplify your trading and kind of put you in the best situations. You can head to thetraderisk.com. There's a link on the homepage to sign up, drop your email. You can click the link that should be appearing in the top right-hand corner. Finishing up the material this weekend. It's a lot of new things, a lot of new content that I'm putting out there for the first time. So I hope to see you guys there for Tuesday's event. So with that, let's get into the market here. S&P 500 now showing down minus 0.61% on the day. The SPY went ex-dividend, so it does skew to the downside by about $1, I believe, give or take. And if we look at the cash market, SPX, you can see we're actually just finished lower, just slightly on the day, minus 0.13%. So let's take a look and analyze this chart here because it's going to be a little more reflective and relative to the levels that we've been looking at when we look at this cash spot market. So weekly chart, we finished higher on the week. Remember, last week was the first time we had a down week in quite some time. We did stabilize. We didn't continue lower. We didn't find another soft sort of pullback here. We saw stabilization right above last week's lows, and we're in comfortably, looks to be trading inside of this range here. If we go back to the daily time frame, that coincides with about 2355 all the way up to 2400, 2395 if you want to be a little more precise. So that seems to be more or less the short-term targets levels where the market has responded to one way or the other. Support down here, resistance as we pulled off of those highs, finally saw enough selling pressure a couple of weeks ago coming into the month of March. And right now the market seems to be comfortably trading sideways, working off those extreme overbought conditions and just catching its breath. Remember, all throughout February, everybody was screaming how overbought and insane this market was, moving to the upside relentlessly. Well, we're starting to get that worked off sideways. We're not getting a deep pullback in price, at least not yet. So we are very sort of constructively so far working off those conditions. It looks to be messy in here, just some messy two-way trading back and forth. We could come back down, retest the lows, push up to the highs. That's sort of what we're looking for here. It's just a chop fest, rotation among sectors. Certain individual names will certainly run. Others are going to lag. It's sort of the hallmark of sideways consolidation as the market catches its breath. The one thing that we do want to note, we had the sharp move off of the Fed here on Wednesday. So we had almost a 1% rally here in the S&P 500. That was constructive, got us off of the lows of this range back up towards the highs. Now we haven't retested the highs. The one bearish scenario that I could paint for you here would be a lower high. So if we don't actually get any continuation higher here, we never make it back up to test 2400, 2395, and then we roll over, break through support, that would be certainly a fairly ugly situation. Again, depending on your time frame. On the weekly chart, it could be, a much needed 5% pullback even would be healthy here on the longer term time frame. But for the short term players, that would obviously, be pretty dramatic given we haven't seen any volatility or selling pressure in quite some time. So that's one scenario. The other scenario, of course, is, we do stabilize after this 2-day pullback, or maybe we have one more weekday on Monday and then we push higher, come back, blow through these highs, and then the trend in party continues higher. That can happen. Or, the more likely is we just chop around here. Nobody knows. I have no magic crystal ball, just outlining some different scenarios to look at. For me, again, I still am looking at this pretty half full, glass half full, optimistic here. The trend is higher. There's not a tremendous amount of momentum right now, but I do want to err on the side of the trend. We have clear levels to work against and trade against. So I am positioned net long, still looking opportunistically at the long side, rotating in and out of names and trying to just let things work, trying not to be so active in this environment. I think that's one of the lessons, one of the things that I had to adjust to coming into this year is the volatility is extraordinarily low. I mean, it's not even 12, 13 on the VIX, spot VIX. And I think when you have situations like that, for you active traders, you probably need to just really sit on your hands even more than you're used to, even if you do have some of that patience. So that's something, trying to just sit tight, let things work. I think that's the way, the best way to approach this market, and just sort of relax about it. The IWM, this is an interesting. This is definitely the most interesting market here. Development this week: 1.84% rally to the upside, getting back above 138, clearing back above all of these highs in here from about 15 or so weeks trading sideways. We of course were up here briefly at the end of February, fell back below, and then we quickly recovered it this week. So constructive action here. Undercut the lows at 135. I think you have a good secondary sort of line in the sand here, this week's lows to use, but clearly the bulls are just kind of ramping up their interest back here on the long side. So we're going to see, can we continue this? And this is going to really be the cue, the clues, I think, for the S&P 500 when you're looking to see which way this range resolves, or kind of how we're going to move throughout the SPY. I think the IWM is really going to be the tell here, because if this continues to get upside traction, retest these highs, again, I do think that's going to support this market. I think it's going to be a good sector of the market to start leading us, or trying to improve on the upside. So I think this is very important. It's at an inflection point right now. This was prior resistance. I wouldn't be surprised to see some hesitation here, maybe a pullback here, maybe a knee-jerk higher low to get put in, and then a fake out and move higher. Again, just ideas. You're certainly going to have to do the execution on your own, but the big level 138, the more we stay above that, the more constructive I become on the small caps, fall back below it, and certainly more neutral, so long as we're in this range again. And the NASDAQ 100, the Qs continue to sort of truck higher here. No change, really just above the 8 period, still doing its thing. It's grinding out new highs. It's resilient, and it just continues to work. Not a tremendous amount of momentum. It's a real grinder. So, and this really has been the same behavior since mid to late February. So that's the Qs. That's the overall market. Let's take a look at some of the other major markets here. TLT finding support at these lows. We talked about the potential double bottom undercut here, and so far it's working. Weekly chart is still pretty horrendous looking, just in the sense of momentum, just 8 and 20, still coming down. You have this big kind of bear leg that started lower, of course, through September through December. But in the more tactical daily time frame, we are finding support at the December lows. That's constructive to see, and it might mean a move back up into the top end of this range, fill this gap, maybe a breakout. There's too many bears positioned here in TLT, so that'll be interesting. But again, I think you still have some signs of constructive behavior here from this double bottom. If we go to gold next, we can see continued to finish the week pretty flatlined. If we go to the weekly chart, up 2%, recovering most of last week's damage. That is constructive there. A little uptick in volume here off of these lows. So not the most actionable pattern right here, but maybe a higher low to get put in. Same thing we talked about here in silver on Wednesday's video. Maybe a higher low to be that was just kind of put in here in the metals collectively, and that's something that the bulls could try and work off and sort of continue off of, if that's going to be the case. So I like silver. I'm looking at it. I want into it potentially here on the long side, but I don't see much of a setup right now for me, but I'm paying attention to it, and I'd be interested here on the long side. Now, if we go to the USO, you can see kind of still fumbling around here at the lows. The waterfall has stopped. The very fast momentum selling here, breakdown from this range, has kind of slowed down. We got this reversal day back here on, what was that, Wednesday or Tuesday, I believe. Take a look. This was Tuesday. Yeah, Tuesday. So we got that kind of pivot low that came in, opened lower, reversed, closed near the highs of the session, gapped higher on Wednesday, and now we're moving sideways. So a little bit of a stance here from the bulls, letting these moving averages catch up. It's pretty damaged territory, of course, but it'd be interesting to see if USO could pull some type of V bottom out, or just continue to stabilize here. So it's just tough to really do much with it. Momentum still clearly to the downside in the bigger picture. UNG, kind of similar situation. Again, we noted the volume increase here on these lows. That is constructive. You're starting to see a little bit of weakening here. That's kind of to be expected, just given the way this bounced higher. But we'll have to see if this turns into a little flag here from this 2-week rally, or is it just a rollover and retest of the lows. I'd like a retest of the lows just because it would set up probably a more actionable setup down the road, but the market doesn't really care what I want, so we'll have to see how that plays out. Still just not clean enough for me to look for any of that right now in UNG. So with that's some of the major markets. Let's get into some of the individual sectors. We're going to start with XLK. Really is the big leader here, XLK and semiconductors. And this isn't anything new. They've continued to lead. We've talked about the same two sectors here for a couple of weeks now in the video, so they continue to work. On the downside, what's breaking down just a little bit here is XLV. Remember, this had made our kind of top list of sectors going back the past many weeks now, and you can see this is starting to get a little bit, maybe just a little bit tired, a little bit extended, just pulling back a bit, down 1% on the week, closing on the lows. So I'd look to, pretty much where this almost sold off to. The lows here from the beginning of the month, March 8th. Let's see if that's a reference point. Let's see if some buyers step in there, about another 50 or so cents lower than where we are. But XLV has been on fire otherwise. Financials also seeing a little bit of crack here. I have no idea what this is. Probably a bad print, late print that came in. So don't mind this, this huge tail. I believe we closed pretty much on the lows, so this is probably where the candle actually ends. Apologies for that. So you can see breaking these recent lows. So the past 3 or so weeks, we've carved out some support up around 24.70, and these were essentially the highs from February. You can see we're breaking below that, so that's an interesting development here, as this was a strong big leadership group for the market. And again, this kind of speaks to that theme, whereas if some of these the financials, for example, start taking a break and we start to see some more rotation into small caps, into some of those more risky assets, that's what, the type of rotation that is sort of discussed or alluded to at the beginning of the video could really keep this market afloat and keep us working higher. So we'll have to see if that develops, but certainly interesting to see a little bit of cracking here in XLF, see if that continues. In IYT, we sort of noted this outside sort of reversal day on Wednesday. This was Fed day where we saw the bullish kind of behavior set in, but it gave most of that back. You could see now on Friday giving 80% of that bar back. We do want to see those lows hold. If the IYT continues to roll over, then I'd say that's another trouble spot for the market. So something to pay attention to for you bears. And then finally, XLE continues to battle it out in this general kind of 1 point area from $69 to $71 here, where this trend line kind of sets in from the beginning of May. So sort of interesting developments here. Again, a little pickup in volume. Is this going to be a bottom here for the XLE in the short term, intermediate term, longer term? We will have to see. Right now, momentum still to the downside, but you can see there is a fight here. Those bars are starting to overlap, get a little wild, and that volume pick up. So some emotion coming in there for the energy names. With that, let's get into some individual names. We'll start with Google. And this is one that, this one is, so we closed at all-time highs, and it's just a very lackluster, boring grind higher. Looks a lot like the Qs, but this is something where, it clearly just aren't seeing any motivated sellers. And this just looks like something where you're going to close your eyes, and this is going to be at 900 plus in about a week or so, because it's just grinding out new highs, and there just doesn't seem to be any catalyst to stop it or any real reason for sellers to get aggressive here. So Google is continuing to work. So for you longer term trend followers, this is working out beautiful for you. No momentum, just a grind. Facebook, very similar situation here. Just look at how little in these ranges have really compressed here intraday, but they continue to just eke out these very small gain sessions 0.29%, 0.4, 0.38, and it's just working. So Facebook, Google look very similar, trading at all-time highs there. Amazon hasn't quite got the got the elevator, got the all clear to move higher in that type of fashion. It's doing nothing wrong. It's just consolidating, but it really needs to clear these highs above 855, 860. So if it can start getting above there, then it's surely to to join the Google and Facebook party. Netflix looking to do the same, right? Hanging up near highs here. It's been a little uncertain in this range here. Had a couple of little scare points in here, but it managed to support itself. Buyers stepped in, and it's closing at all-time highs, I believe. Looks like it. So new all-time high, closing high in Netflix. Looks good, a little bit more of an actionable setup base that this is emerging from, so that's something that's interesting, but still just not much volatility. Alibaba, this one's been on everyone's radar. It's been tough to get going. Look at all these tails here rejecting those highs, and it hasn't really wanted to cleanly close at highs, but it certainly did resolve this range to the upside. So about 104.50 or so was this prior resistance. It is clearing above that. If you go to the weekly chart, you can see just how just how persistent it's been in this area. So for now, Alibaba looks good to the upside. Let's look at Snapchat real quick. It's pretty much just rolling over here. Hasn't found any support, any meaningful support. If we go down to the hourly chart, let's take a look here. It's pretty much a contained downtrend this entire time. We get a couple of, we just got a series of lower highs. We've got a couple of $1 or so rallies, but that seems to be sold into, and we continue to make lower lows. So we're looking for a change in that pattern. Go back to the daily chart. You get a little bit of sideways action here over Tuesday, Wednesday, and Thursday. So, if Snap starts to reclaim $21, excuse me, that's the, I think that's going to be, the first sort of tell that maybe there's something brewing here. We talked about, I was posting about it on Wednesday, where we had this, this session where we were almost, at one point we were engulfing Tuesday's action, Tuesday's session, but the bulls just couldn't hold in. We ended up, fading off those highs, and we didn't close that strongly, and then it, of course, got wiped away on Thursday. So again, not too much else to say about Snapchat right now. It's pretty much in a void, or just be short. Twitter, let's end it here with Twitter. We haven't talked about this one in a while. Similar to Snapchat, this one continues to roll over and not show any signs of life. It had a nice pop here. I believe this was earnings. Had this push back above $16. Looked, sort of like it could start to hold up and turn itself around up here. It lost a key level of $16.30, traded back down to $15.50, which was this earnings day low, and then it broke below there, so it lost another key level. So Twitter also just really struggling to catch its footing, to just stabilize itself. You can see maybe that's happening over the past week or so as it gets tight around this $15, but really needs to get back above $15.50. That'll start to at least show some signs of interest, some signs of stabilization. Otherwise, the 8 and 20 are just cruising this thing lower. So that's Twitter in a tough spot, just like Snapchat. So that is the weekend recap. Again, the webinar next Tuesday, this coming Tuesday, check that out. Head to thetraderist.com. On the homepage, you'll find the link. Thanks, as always, for watching, and hope to talk to you again soon.